Hey everyone, and welcome back to Token Trends Weekly. Today we're diving into the world of stablecoins.
Yeah, we're going to break down what stablecoins are, how they work, and why they're making waves in both the crypto world and beyond.
It's funny, when I first heard about stablecoins, I thought, wait, isn't the whole point of crypto that it's not stable? It seemed like a contradiction.
That's a fair point. I mean, a lot of people are drawn to crypto because of the possibility for huge gains, but that volatility can be a double-edged sword here, especially if you want to use crypto for everyday transactions or as, a way to store value. That's where stablecoins come in.
Okay, so let's start with the basics. What exactly is a stablecoin? Like in the simplest terms.
Basically, stablecoins are cryptocurrencies designed to maintain a stable value.
Okay,
They're pegged to another asset, kind of like an anchor, keeping a ship steady in rough waters. This could be to a fiat currency like the US dollar, a commodity like gold, or even another cryptocurrency.
so instead of riding the crypto roller coaster, they aim to stay relatively constant.
Exactly. Now, to achieve this stability, different stablecoins use different mechanisms. The most common type is fiat collateralized stablecoins, like Tether, USDT, and UST Coin, USDC, two of the big ones. They maintain their PIN by holding an equivalent amount of US dollars in reserve, typically in bank accounts.
So for every USDC out there, there's a real US dollar backing it up somewhere.
That's the idea, although the level of transparency and auditing around those reserves has been a topic of debate. But the principle is simple. One stablecoin equals $1.
Got it.
Now, things get a bit more interesting with crypto collateralized stablecoins like DAI.
Okay.
Instead of relying on fiat reserves, they're backed by other cryptocurrencies, often held in smart contracts.
Wait, hold on. How can a stablecoin be backed by something as volatile as another cryptocurrency and still remain stable? That seems a little counterintuitive.
It's collateral, right? There. So this is where over-collateralization comes in. To mint one DAI, you need to lock up a larger value in a different cryptocurrency, like Ethereum, as collateral.
So you're putting down a bigger deposit to borrow a smaller amount of stablecoins.
Precisely. This extra collateral acts as a buffer against the volatility of the underlying crypto assets.
Okay.
And this is where smart contracts are really important. They automatically manage those collateralization levels. They adjust them as the value of that underlying crypto goes up and down. So if the collateral's value drops too much, the smart contract might automatically liquidate some of it to maintain the peg.
That's pretty impressive. This sounds like a lot of complicated things are working in the background to keep these stablecoins steady.
Yeah.
You mentioned other types of stablecoins.
Yes. We also have commodity-backed stablecoins. These are pegged to physical assets like gold. Okay, Tether Gold, XAUT, and PAX Gold, PXG, are good examples. They give investors exposure to gold, but with the perks of blockchain technology.
Interesting.
And then there are algorithmic stablecoins, which are a bit more experimental. These aim to maintain stability without relying on any collateral, instead using algorithms to control the supply of the stablecoin based on market demand.
Algorithms. That sounds both fascinating and a little risky.
It can be. The idea is that the algorithm automatically adjusts the supply to keep the price stable. So if the price starts to drop below its peg, the algorithm might decrease the supply to increase demand and push the price back up, and vice versa if the price goes up too high.
Like a self-correcting system, constantly working to stay balanced. But didn't one of these algorithmic stablecoins, Terra USD, collapse last year?
Unfortunately, yes, and the collapse of Terra USD really shoved the risks that come with this approach. Algorithmic stablecoins can be complex, and if that algorithm isn't designed or tested properly, they can be really vulnerable to, sudden market shifts.
Right. It's a reminder that while stablecoins have enormous potential, they also come with challenges. But before we delve into those challenges, let's talk about how stablecoins are being used today.
What's really cool is that stablecoins have gone way beyond just being a theoretical thing. They're being used in so many ways right now, actually changing how finance works.
It's amazing, right? I mean, from what I've read, it's not just like crypto experts using them anymore.
Right.
It's everyday transactions and even like affecting global economy.
Exactly. For example, stablecoins are super important in the DeFi ecosystem, decentralized finance. Think of them as the entry point for anyone wanting to explore DeFi.
No, yeah.
DeFi is all about making financial systems open and available to everybody. And stablecoins bring the stability needed for things like lending, borrowing, and trading
Right.
in a world that's otherwise, famous for its volatility.
It's like they created this whole new world for finance. You don't have to worry about your money going up and down every other day.
Exactly, but it's bigger than just DeFi. We're seeing people use stablecoins more and more for just like regular payments and peer-to-peer transactions. They're faster and cheaper than traditional systems, especially for sending money across borders.
I read something about how much cheaper it is to send, what are they called, remittances using stable coins compared to old school ways.
You're right, the savings can be huge. Like sending $200 from, let's say, sub-Saharan Africa using stablecoins is about 60% cheaper compared to traditional methods that use regular money. That's a big deal for people who rely on sending money back home.
60%. That's enormous. That's like real money back in the pockets of people who need it.
Exactly. And this is especially important for places with economic instability or where prices are rising fast. Stablecoins pegged to, more stable currencies like the US dollar can help people protect their savings from inflation eating away at their value. Imagine living somewhere where your local money is losing value quickly. Stablecoins offer a way to hold on to your hard-earned money.
It's pretty amazing to think about the impact they're already having, especially in those areas with economic difficulties. Like we're watching a financial revolution happen in real time.
It really does feel that way, and it seems like the potential uses for stablecoins are almost endless. But maybe before we get too excited about the possibilities, let's take a second and think about the future of stablecoins. Okay. What do you think the road ahead looks like for these digital disruptors?
Yeah, it really is exciting to think about the future for stablecoins. Yeah, especially with how much they've grown and how quickly they're being adopted.
Yeah.
Where do you think this is all headed?
Well, one of the most fascinating things happening is this sort of merging of technology and regulation. You see, governments all over the world are realizing the potential of stablecoins, right? But they're also realizing the need for some safeguards. So they're trying to create, frameworks that balance innovation, consumer protection, right, and of course, overall financial stability.
So it's not just the Wild West anymore. Like there are some rules of the road starting to emerge.
Exactly. We're seeing a definite move towards more clarity and more oversight. Like, for instance, the European Union introduced what they call the markets in crypto assets regulation, or MIGA for short. And it aims to set up a really comprehensive regulatory framework for crypto assets, including, of course, stable plans.
Yeah, and I've also heard about some stablecoin frameworks being developed in places like Singapore and Hong Kong.
Yeah,
It seems like it's really a global thing.
it really is. And even in places with typically stricter financial regulations, like the US and Japan, we're starting to see some movement. They're looking at ways to regulate stablecoins, but in a way that doesn't stifle innovation. Yeah, it's a tricky balance.
Right. So even though there are like these challenges, yeah, it seems like the overall regulatory landscape is starting to embrace stablecoins, even if it's a little bit cautiously.
I think that's a great way to put it. And as this landscape evolves, it opens up even more possibilities for it finding new ways to use stablecoins. We're already starting to see them being explored for things like foreign exchange and trade finance.
Interesting.
This could streamline those cross-border transactions and potentially revolutionize entire industries.
Yeah, I've also been reading about how they might be used in supply chain management,
Sorry, exactly.
like keeping track of goods and payments in a more efficient and transparent way.
Exactly. And then there's micropayments and, of course, the whole world of the Internet of Things, or IoT. Stablecoins could make it possible to have seamless, super low-cost transactions, in a world where devices are constantly talking to each other and exchanging value. Just imagine your smart refrigerator could order and pay for groceries using stablecoins, or sensors of the supply chain could trigger payments as goods move from one place to another.
It's like we're building a whole new financial system based on stablecoins.
It really is.
Yeah.
But of course, along with all this incredible potential comes some challenges you'd have to address.
Things like, the regulatory uncertainty in some parts of the world, and the possibility that bad actors might try to misuse stablecoins. And we have to make sure there's real transparency when it comes to those stablecoin reserves and the audits that are done. If we want stablecoins to be widely adopted and trusted, we have to make sure they're stable and secure.
So it's not all like smooth sailing. Yeah. There are some hurdles to overcome.
Absolutely. But what's so remarkable about stablecoins is that they represent a genuine innovation in finance. They bridge the gap between how things have traditionally worked, and the exciting possibilities of blockchain technology. They give us a glimpse into a future where financial transactions are faster, cheaper, and open to everyone all over the world.
Well, I think it's safe to say that stablecoins are definitely more than just a fad. It feels like they're here to stay and they're going to keep shaping the future of finance. I can't wait to see what happens next with these digital disruptors. Me too. It's such a fast moving and dynamic space. Definitely one to keep an eye on.
Absolutely. And that brings us to the end of another deep dive into the world of crypto. We hope you found this exploration of stablecoins informative and helpful. Make sure to subscribe to Deep Dive for more deep dives into the ever evolving world of blockchain technology. See you next time.